guys, Brian Stevens and Joanna Lockhart here with you at Mortgage Shots. Listen, we're going to bring you an update of all the Congress people who got illegal mortgages, and I'm telling you, this list is going to grow. You have to understand that the mortgage industry, the residential mortgage industry, is all built on the Dodd-Frank Act. Christopher Dodd of the Dodd-Frank Act, back in 2008, received an illegal loan from Countrywide called the Friends of Angelo loans. We have corruption at the top, and boy, we're going to see a whole bunch more of it in round 2. But on with the show today. Did you know that a federal housing program that provides assistance to as many as 60,000 low-income Americans is reportedly on track to run out of funding by the end of next year? HUD, who has jurisdiction on the FHA, says the Emergency Housing Voucher, the EHV program, is designed to assist individuals and families who are homeless, at risk of being homeless, fleeing, or attempting to flee, domestic violence, dating violence, sexual assault, stalking, or human trafficking, or were recently homeless or have a high risk of housing instability. This is according to HUD, who has jurisdiction over the FHA. But the program's current appropriations are set to be depleted by the end of 2026, and this is according to reporting based on a letter from HUD that was obtained by the Associated Press. Okay, you understand. A program to help battered women and homeless people has no more money, according to HUD, who has jurisdiction over the FHA.
FHA's capital reserve ratio is at 11.11%, up from 8.56 in fiscal year 2022. Total reserves approximately $44 billion, up from $34 billion in fiscal year 2022. Outstanding insurance in force over $1.3 trillion.
All right, so HUD and FHA have $44 billion. That comes from the Mutual Mortgage Insurance Fund, or the MMI account. And that MMI account only has a congressional mandate of 2%. They have over 11%. So HUD literally has $35 billion more than they need. Yet they ran out of money to help poor people. And all of this money comes from the mortgage insurance you're paying on your FHA loans. So the increase was driven by higher premiums, strong home price appreciation, and lower than expected claims. The fund has recovered significantly from the 2008 crisis period when it required a $1.7 billion bailout in 2013. Listen, this is important for everybody to know if you're concerned about housing and the money that you're paying if you have an FHA loan. FHA has an extraordinary and massive influence from all of the industry to lower the mortgage insurance on FHA loans. Yet they haven't done it. FHA now says they don't have the money to help poor people and battered women. They have over $35 billion more than they need. Yet they haven't done it. Yet today we have lower home ownership rates. Why is that? Well, I'll tell you. Because the agency in charge of bridging the wealth gap are not doing their job, and the hundreds of billions of dollars that they have spent to fix the problem are not making it to the problem. Do you think I'm wrong? Well, I just told you that HUD just said they can't fulfill their mission statement to serve underserved communities, the very existence for the formation of HUD, because they don't have the money, and I just showed you that they have $35 billion more than they're supposed to have. Yet the money isn't making it to the next generation of FHA borrowers. They're paying higher premiums, and it's not making its way back to people who need it, underserved communities, battered women and poor people. Guys, I gotta tell you, when you look at this, this is a Michael Richard joke. It just ain't funny. I hope this helps.